Hi and welcome to my channel. I previously done an update on Greggs and I've seen a lot of people view it, especially given the current share price and what's been happening in particular over the last week. So I thought I'd follow it up because we're just about to go into Greggs providing a Q3 update, and I thought it'd be a good opportunity just to talk it through and see sort of where we're at prior to that announcement in case you were considering buying or selling the Greg shares. Now, I do have some Greg shares in my portfolio and I'm going to do a portfolio update in my next video. But I can tell you now, without doing any big spoilers, Greg's is the only one that is currently in the red. All my other ETFs and shares are in the black. They're all good. Greg's is the one share that currently sits comfortably outside that position. So let's just go into Greg's. As you can see, we've got a P to E ratio of 11.27, dividend yield still pretty healthy, 4.34, and currently trading at £15.91, which really masks what's happened during the month of September. But if you just look at this graph at the moment, you know, it opened up the year in, if we go there, go through to October, it normally does drop in January. So it's gone from about £28 and obviously it's gone all the way down. So at the moment you could see, if you look at that chart all by itself, you would go, wow, that's just a heck of a drop, coming close to 50%. Looks bad, right? And it, no masking it, it does. Now, where I got into Greg's was around this time here. So if you look at where we are here, I got in around the 1919, thinking pretty much that's sort of decent value, slightly undervalued. So I got in there feeling pretty confident. And you can see it's just kept dropping and dropping. Bit of recovery and then continual drop. So there's lots going on in Greg's in terms of it coming down. And predominantly the driver behind this fall here was the Q2 update, which showed that growth had slowed down. Greg's is in a challenging position because the national insurance contributions from employers went up in the UK in April as part of the UK government's additional taxation to help the public services, but obviously that's not great news from a company and business perspective, so it's increased costs. Greg's have also suffered from the fact that the UK economy isn't in the greatest shape. There's been quite a bit of shoplifting issues of the Greg stores where they've had their product out and easily grabbable, so they've been trying to combat that as well. And like I say, with the market saturation, there's only so far you can grow within a domestic market before really you're starting to cannibalise your own stores by putting another store in there. So market saturation is an issue. So the update pretty much said pretty much all that in a different way. But those are the key call outs, and therefore with the growth expectations reducing, profit being slightly behind where it was in 2024, though they were a bit woolly in terms of how they said that, but it will be behind 2024. You could see the drop off in price. So from around that 19 mark all the way down to 16.75. So it's a good way of knocking £3 off your share price. Now, why do I view Greg's as a bit of a roller coaster? You only really have to look at what's been going on over sort of a 3-month time period, and in particular it's been ramping up over the summer into early autumn. So, you know, we've got these big dips here, look, if I can just get it right. So, you know, we went from 15.61 down, up, down, big fall here, look, during September, bit of a recovery, and then down the shorters. So there's been companies taking big short positions who drove this down all the way down to 15.10. It went as low as 15.06. And then just on Friday, look at that climb, just in one day. So does this mean that the shorters have now settled their position due to the fact that the Q3 announcements coming in? Maybe. It's in the highest position. I think you can see from here, it's in the highest position it's been since early September. So 11th, 12th of September. So it's in the best position it's been in for a couple of weeks. It's sort of recovering back to that £16 mark. So it kind of shows that there could be value. When you look at the fair valuation methodology, if you do the Simply Wall Street discounted cash flows, it's coming in at just a little over £13.50. So still some way to go. But if you look at the Peter Lynch formula, it comes in at 34.45. So a lot of upside still to be had. And if you take the average, you get to about 24. Analysts as well are split. I've seen analysts come out saying it's a £13 stock. Equally, you've got Barclays and UBS. They're coming in at around the £21 to £22 range. Personally, being a bit cautious, it feels like a £20 to £21 range sort of feels and looks about right. What is critical is what is going to be put into that Q3 statement. So depending on whether you're bearish or bullish and which analyst person you want to follow, and you have the one you back the most, you either think I'm not touching this because it's going to fall further to more towards the £13 mark, I do not want any part of this, or you could feel a bit more bullish and think, well, this is easily sort of 20 to 22, lots of upside when you look at it from that perspective, and I want a bit of that. Do your own research. This is not financial advice. You just have to weigh it up. I feel personally, I'm more in that I think this is a 2021 range. I think there is opportunity, which is why I've bought in. I've taken my average down, so I'm more than happy to take that 4% dividend yield, just over 4%, just take the dividends, wait for it to come back. And then I would look, given my current position, it's my highest position in my current portfolio. It's too high and never intended to do that. It's just because I DCA'd it down. So for me, I'm just going to hold position. I'm not looking to buy anymore personally. But the 1st of October Q3 update is the critical one. If you were cautious, you would wait to see what that would do and wait to see till the end of the week till it settles down, just to see which way it's going to go. The reason I put the picture on the front of sausage rolls on a roller coaster, it definitely feels like that. No way do I know if this is going to go up or down. But what I can probably safely say, it'll do the whole roller coaster thing. Hopefully you find that interest. I'm sorry there's no hard conclusion apart from I believe it should be in the 20 to 21 range, but equally I need to see that Q3 update. If you want me to do another video on Greggs and sort of look at the Q3 update and pull out what I think are the key takeaways, just as I've highlighted in Q2, more than happy to do that. Drop me a comment. And my last comment here is, if you like this, please hit the like button. Feel free to subscribe. It helps me out, makes me feel like I'm doing something useful. And also I'll put in a link to some free shares from Trading 212. If you're interested and you want to open an account with them, you get a free share. I get a really small free share. I've already had one, so my thank you to the person who did that already. I think I got a £10 share in Google / Alphabet, and they got a £70 share in Meta, which they were thrilled about. And congratulations to them. So if you're interested, I'll drop the link in the comment section. So what do you think with Greggs? Feel free to drop me a comment, and I look forward to seeing you next time in my portfolio review. Enjoy.